So if I were to describe the current global investment climate, I would use the words challenging and uncertain. Challenging because we have a lot of legacy issues that are still haunting us from the past. We came out of the financial crisis about 10 years ago, and we are still in an environment where central bank policymakers are using sort of a loose monetary policy, quantitative easing to stimulate the economies. So that means that, the recovery never really came. There were signs of recovery in 2016-17. There were signs of the yield curve steepening, but that never came. We are also seeing a bipolarized world. There's enormous tensions between the superpowers, specifically China, Russia, and the United States. This is evident in the trade wars that we're seeing. This is evident in the proxy wars that we're seeing. And this is evident in just the United Nations Security Council, where often the permanent members, like United States, often have opposing views to members such as Russia and China. So this sort of an environment isn't optimal for global capital flows and trade and investment. Finally, in Europe, we're seeing another big legacy issue, Brexit, an event that happened 3 years ago, still unresolved to this date. So that puts all of Europe at risk and uncertainty. I think amidst all the turmoil and the uncertainty in global markets, the Asian investment landscape is actually relatively positive. The first thing that comes to mind is that Asia has been classified as almost a region where investors would traditionally go for a yield pickup. This is because the region has been almost described as having a risk premium. Asia has a risk premium because it is considered illiquid, it has inherent credit risk concerns, and all of that. But as we see the development of financial infrastructures based on sophisticated technology, as we see strong, prudent regulatory policies unfold in the region, the perception of this region is shifting, and investors are actually looking at this region as an opportunity to invest in its growth, which is, in the long run, a lot more consistent with the actual potential this region has to offer. So yeah, I'm a big believer in this region. So this is one of the biggest ironies of the Asian region. Most of the investors in the region, whether they're high net worth or other client segments, are actually quite risk averse, and they're investing quite a lot in offshore government bonds and US treasuries, so on and so forth. They're not actually looking at opportunities within Asia, opportunities for growth and opportunities for financing, and therefore we're seeing that Asian investors are not really channeling funds across to their own investment needs within Asia. The left arm isn't really talking to the right arm, unfortunately, yes. So when I talk about Asia having a lot of assets, I talk about a lot of the investments that are done off market, so off exchanges. The one that comes to mind is private debt. A lot of Asian growth is financed through private debt or direct lending, and this isn't captured in an exchange. This is making regulators rather nervous, right? So the question is, what is the disadvantage of that? The disadvantage of having something like private debt is that you are looking at funds going from one party to the other, and it's illiquid because those funds remain with the party for the maturity of the lifetime. Why not create a secondary market? So what we thought of doing is we thought of looking at Asia's illiquid assets and tokenize them using blockchain and putting them on digital exchanges. And that way, immediately, it always has value, but immediately it has liquidity. And that will allow for circulation of these assets to be traded on secondary markets.